So we've got this article from Bloomberg that came out very recently. Bitcoin extends retreat from record as bubble talks escalate. Digital token dropped back as global risk sentiment wobbled. Bank of America says crypto among assets showing bubble-like aspects. Bitcoin extended the retreat from its latest record high amid an intensifying debate about whether bull run in cryptocurrencies is evidence of speculative froth in global markets. Now, if you are just reading that and that alone, it's very easy to understand why you might be scared about cryptocurrency or Bitcoin in general right now. Just reading that article on its own without any other types of information can, I expect, to create a lot of fear in a lot of people out there. But I'm here to show you the truth about what's actually going on, because that is a very narrow-minded take of the actual situation we're in right now. As a matter of fact, it is a massive opportunity to make a lot of money in cryptocurrency right now. Particularly I'm talking about Bitcoin. Given that price decline that we've seen, it does present a massive, massive opportunity. And if you just read articles like this from Bloomberg, you're definitely going to miss the opportunity and you're not going to have a good understanding at all of what's going on. Saying that, what is going on right now? Because this week we did see Bitcoin at its high, okay, put in an all-time high of just under $74,000. That is the highest level Bitcoin has ever reached in its existence, just under 74,000, like 73,900, something like that. And since that high, we have seen Bitcoin drop a maximum of 12%, 12.5% this week to a low of 64,000. So now what's happened is you've got news outlets like Bloomberg coming out and saying, hey, this is the end of cryptocurrency. This is the end of the bull run. It's only down from here. That's what the article makes out to seem. The true story is very, very, very different from what they're making it out right now. That's a 12% decline from its all-time high levels. Currently it's at 68,000, so it's jumped up a little bit. The real reason why we've seen Bitcoin drop 12% in the last week isn't because it's a speculative asset. It's not because there is this froth in the market. It's not because cryptocurrencies are a scam and they're made up. Simply what it is, if you look at the chart, you can see that at this level right here as well, and this one here, we had massive buying, okay? Massive buying at the peak of the last run that we just seen, starting from the mid 60s, okay? From the mid 60s, you had a lot of froth at the top of the market. So you had a lot of people, and we're talking traders, we're not talking institutions, who would come into the market, or those who, retail, who aren't really equipped with the information that they need to fully understand what's going on here and how to actually take advantage of Bitcoin. Short-term positions, short-term long positions coming into the market, and simply this 12% decline was just to take them out of their position. And this is called a liquidation event. So it's just taking the froth off the top of the market. It's like a natural event that happens in the market to cleanse itself. It's just a cleansing mechanism where it just boots out those who were in but had badly placed stop losses, those that were in but weren't in for the long term. Those types of participants, it just took out of the market Simple as that. Now, this is something that I did tell you would happen last week. I was telling you when Bitcoin was at 73,000 that we would get this liquidation event that takes these short-term traders, these weaker retail market participants out of their positions. And that's simply what happened. And that is why they've now been taken out of their position. They have lost money doing so. As a matter of fact, you can see that this move has triggered 400 million in liquidation. So 400 million has been lost by these people who were short term in their position. They didn't have a long position, or they had badly placed stop losses. They left because of fear. It's those types of people, okay? It's not the types that have massive amounts of money and they're building positions, they're building stakes, or those types of traders are actually good at what they do. So why has this happened now? Okay, why is it that we've seen this liquidation event and the market isn't continuing to go higher? It's because the halving event is coming up. The halving event has created a stall, all right? We're going to call it the halving stall. And that has stopped price just shooting up much higher than 73,000. That is going to be at the back of a lot of people's minds, and they know the halving event that is coming up April 16th. This is where the new daily release of Bitcoin splits in half. So from 900 now, every day 900 Bitcoins are released to the market. On April 16th, 450 new Bitcoins will be released to the market. A lot of the market knows that this event creates two things. Firstly, it often creates sell-offs. So it creates situations where Bitcoin will drop 15, 20, 25%. And secondly, they know that it creates massive explosions in price. We've seen Bitcoin double, triple in price a few weeks, a few months after previous halving events. And these halving events come around every 4 years. So they're highly anticipated events. They're not events that take place every day or every month. It's every 4 years. It's like the Bitcoin Olympics. And that is coming up April 16th. The market is very, very aware that we have seen declines before or after the halving event of 30%. And the market is very aware that we've seen Bitcoin quadruple in price 18 months after a halving event. So because of that, you have a lot of people, one, who are on the fence and who are waiting to put in capital closer to that halving event. Now, because of that, you have conflicting forces on price, which is why price has stalled at that the mid 70s, 74,000 level, and hasn't just simply made its way up to 80,000, 90,000 and 100,000, which is where it's on course to go. But in the meantime, we have to have these types of liquidation situations. That being said, what is next for Bitcoin? Well, we've seen a rebound, okay? We've seen a bit of a rebound off the low that it did put in, but it is still in a short-term weak position. So yes, on a bigger time frame, so if we're extending the chart out, Bitcoin is still very much showing strength in a bull run. It's looking fantastic. But zooming in to this smaller time frame, we're still on this short-term decline, still on this short-term liquidation cycle that we're seeing right now. And that would stop once we cross over 70,000. Once we cross back over 70,000, that's a key signal to the market that there is resumed strength, and it should be good to go from there. But until it crosses over 70,000, we could very much see more liquidations taking place next week. And that is because there is still these positions down around 60, just under 65, that can very well get taken out of their position. That could happen very early next week, Monday, Tuesday. But until we cross over 70,000, we're still in this short-term downtrend. But once all of this passes, often after these liquidation events, you get massive increases. So when you get situations like this, particularly in bull runs where you see Bitcoin dropping, pulling back, these types of levels, 15, 20%, these are massive opportunities for accumulation. So to get in and to stack Bitcoin, or to take trading opportunities, because the rebounds, they are big, because a lot of people would have gone short as price was dropping, and then they have to switch sides as price shoots up. So then you get the shorts going long, and that creates short squeezes in price. So it's a very healthy move. If you take a look at this is just a Fibonacci retracement. For those who've never seen this before, it might look like something complicated. It's very simple. It's just a tool that can be used to show where price is going to reverse and move higher. So in a downtrend, in this short-term downtrend like we've seen, a Fibonacci tool is very useful because it has certain levels which predict where price is going to reverse and move higher. These are only really powerful in two situations. One, strong bull trends. The second is strong downtrends. Where price is consolidating or ranging for a period of months, it's useless. But in strong bull trends, it's very useful. Why? Because it's a tool that a lot of the market runs to give guidance on where price is going to go. And because of that, you get this collective effect going on. Everyone using the same thing, everyone buying at the same level. That's why it's useful. Saying that, this 12% decline that we've seen has pushed Bitcoin to a 50% retracement. So this is a key retracement level. Predicted that this is a predictive level on the Fibonacci, right? So we've seen a pretty convincing bounce so far off that level. Now, if Bitcoin was to, as I said, if it fails to break 70,000 today, tomorrow, early next week, you are going to get a decline back down to mid 60s. And you could very well liquidate everybody that's gone long today as it's rebounded and actually move down to this 60% retracement level. That 60% retracement level will bring Bitcoin to just below 64,000. And that is the lowest I believe we will see Bitcoin go in this short-term down cycle. So let's say Monday, we see Bitcoin reverse. It doesn't cross above 70,000. It moves lower. And then on Tuesday, let's say we see Bitcoin at just below 64,000. That means it's retraced 60% from its high, from this trend here, from the beginning of March to its all-time high. 60%, that would bring it to just below $64,000. At that price level, you're going to get a huge wave of buying. You're then going to see an explosion in the price of Bitcoin if it's able to drop down to that 60% retracement level. You're going to get a huge wave of buying, and that will likely take it from 64,000 above 70,000 with ease, because you're going to have all the shorts. Okay, you're going to have all the longs have been liquidated. You're going to have short traders who are now having to switch positions. They're going to become long positions, and you're going to see an explosion in the price. So that's all under the condition that it doesn't just shoot above 70,000 from here in the short term. But saying that, we have previous Bitcoin cycles, and in these types of situations where Bitcoin is falling 15%, 18%, it's very easy to get consumed in what's going on the smaller time frame, on the short term. And it's very easy to forget the path at where it's going and the reason why you've got in. In the 2020-2021 cycle, bull cycle, we saw 8 20% or more drops in the price of Bitcoin as it went from 8,000 all the way to 64,000. Bear in mind, the move that we've just seen in Bitcoin isn't even 20,000. It's 13%. Sorry, it isn't even 20%. It's 13%. And bear in mind, the last bull cycle, 2020, 2021, we saw 8 declines in price of 20% or more. So it just shows you along the journey, remember, it went from 8,000 to 64,000. Along that move, many traders, many people, buyers would have been wiped out of their position, sold prematurely, got faked out, were scared, whatever the case may be, just for the price to go from 8,000 to 64,000. But in the meantime, it dropped 8 times of more than 20%. So a price drop of 13% is nothing, absolutely nothing in the bigger picture of what's happening here. It's very normal to see it drop 12%. So when you have Bloomberg coming out saying it's a bubble price, fear, crisis, all this kind of stuff, you know that it's just nonsense. You know that's not the true picture. You know that's a very narrow-minded way of looking at the situation. They're looking at it, they're talking about it from a 1 week perspective. When you zoom out and you look at over years or months in terms of where price is going, it's a very different picture. So they're completely wrong in saying that. Missed the mark completely. Will we get a drop of over 20% in this bull cycle? Absolutely yes. As a matter of fact, when you should expect the first massive real liquidation event, remember 400 million was liquidated as it moved from 73 to 64, that 13% decline, or 66,000. When you get the 1 billion, the 2 billion liquidation event where it drops 20%, that will come just before the halving event. That's my expectation. So if we push into the halving event, which is taking place April 16th, we push into that, we get closer to the halving event, let's say it's April 10th, price of Bitcoin is 76,000. It's very likely you're going to see a 20% drawdown from there. And that will take you, Bitcoin could potentially take Bitcoin down into the 50s, the high 50s. That is a very large possibility of what could be happening in the next month for Bitcoin. That would just be a massive buying opportunity. Yes, the headlines would be enjoying that, definitely lapping that up, making the most of that, putting a lot of fear out there. Bitcoin's dropped 20%. It's a crisis. The bull runs over. It's a speculative asset. But it would do that just to take people out of their positions who didn't have full information, just for it to go from 55 all the way up to 100. And they would miss out on that opportunity. As a matter of fact, if you were to see Bitcoin do something like that, to drop 20% before halving, or it could just be just after halving, depending on how it arrives there, that would be a massive opportunity to stack your position, to get ready for that move, that true move. We haven't seen anything yet. I had a friend in the gym. He was telling me, oh, you must have been very happy to see Bitcoin go up to 73,000. I said, no, I wasn't. I said I wasn't because that's not the true move. I'm not waiting for 73. I'm waiting for 250,000. I wouldn't sell it there, but I'm waiting for those types of numbers because that's coming. But you just have to ride through these types of events that we're seeing. This is interesting, right? So the average pullback in 2016 to 2017 was 32%. The average pullback in the bull market after that, which was 2020, 2021, was 24%. So a drop, okay, a drop of 6%, 8%. The bull market after that, 2023, which is this one right now, 2023, 2024, the average pullback so far is 21%. So we can see that as every bull market, the next bull market after the previous, we're seeing the average pullback in Bitcoin drop. It shows you that this is just a maturing, this just basically just shows you the maturity of Bitcoin over time. Okay. It was way more volatile back in 2016 than it is right now. The pullbacks, the moves were way larger than what we're seeing right now. That's a good thing, and that's going to continue to happen. Okay, the bull market after this one, you'll see again a shrinking in the average pullback. Why is that happening? It's happening because the pool of holders of Bitcoin, all right, the army that hold Bitcoin looks different every single time. It matures, it improves. So this time round, we know we've seen institutions come in their billions and continue to do so, and continue to become a larger and larger component of the overall share of Bitcoin versus what it was last year. Last year, we know we had massive amounts of retail and very limited institutional participation. That's basically reversed. We have way more institutional participation, and what the pool of Bitcoin holders are doing with their Bitcoin or intend to do with their Bitcoin is very different to what we saw in the last cycle. In the last cycle, we had a lot more speculative holders, those holders that didn't really have a long-term strategy, those holders that were easy to shake out of their positions. Now we've got a much more sticky base of Bitcoin holders. So by that, I mean the institutions, they don't plan to sell their Bitcoin just because they've seen a 13% shake off in price or a 20% drawdown in price, because they know, based on Bitcoin dynamics with its maximum 21 million supply, they know that with Bitcoin being seen more and more as a store of value, they know that with fiat currencies continuing to be devalued through continuous quantitative easing or misuse of fiscal monetary tools via central banks, they know that Bitcoin is able to preserve and increase capital. And as time extends, right, as the decades go on, it'll be more seen as a preservation tool than a capital, a way to increase capital. But because of all of this, it means that those that are holding Bitcoin view it very differently to how they did last year or last bull market. So because of that, the amount of people that sell when it comes to drawdowns or liquidation events is lower than it was every cycle. So that's why we're seeing lower average pullbacks than last year. So for example, this 13% pullback that we've seen over the last week, if this was 2020, 2021, it wouldn't be 13%, it would be 25%. Okay. So it's becoming less volatile and more consistent in its price movement. Now, the headline from Bloomberg was, in fact, let me read it again. Bitcoin extends retreat from record as bubble talks escalate. Really and truly. So that's their story of the week. Really and truly, it should be. The story of the week should be Bitcoin spot ETFs had record inflows this week, signaling that more and more institutions are buying Bitcoin with the aim of holding Bitcoin because they foresee an explosion in price. That should be the real headline, okay? In these 13% drawdowns, it's very easy to miss the mark of what is actually going on, what you should actually focus on. It's very easy to think, oh, Bitcoin's in the 13% drawdown, that's bad. When really and truly the story is, no, we have seen record institutional adoption of Bitcoin this week. And that has a massive impact on what is going to happen to the future price of Bitcoin. Bitcoin saw a $1 billion inflow from majority were institutions through spot ETFs like midweek. That is huge. And these massive inflows, they will continue. That's a big game changer for Bitcoin. So while the institutions are still buying, what are the retail doing? The retail are sleeping. Okay, we know we have billions and billions sitting on exchanges in stablecoin. So this is a cryptocurrency that is pegged to the dollar. Basically they just have dollars sitting in their exchanges, not doing anything, just on the sidelines. Because a lot of people do not believe, retail do not believe in this bull market that we're going through. And they'll start to believe in the bull market. They'll start to notice it when Bitcoin crosses $100,000. And they've seen it on days like today, where it was sitting at 64,000. Or if we get more downside pressure, pre-halving sell-off down in the high 50s, and they've missed the opportunity to double their money as Bitcoin's gone from there to $100,000 plus. That's the real story of what's going on. So it's very easy to miss the mark via the news outlets. If you just type in Bitcoin news into Google, you'll see everything talking about crisis, froth, it's office all-time highs, retreat, speculation. You won't see anything about record ETF inflows recorded this week, which is a massive move in the adoption of Bitcoin via institutions, a massive move in the continual maturity of Bitcoin, and the fact that we are moving day by day to a position where Bitcoin is seen more and more as a digital store of value. You wouldn't see anything about President of El Salvador holding 5,000 plus Bitcoins and continuing to add 1 Bitcoin every single day, because he understands and sees that fiat currencies are going to continuously be devalued, and Bitcoin is a true store of value, and how he's building wealth for his nation, where they'll have no debt, which is very different from most other nations in this world, where US is being crippled by debt. You wouldn't see any of that. You wouldn't see anything about the halving event and how, on average, 18 months after a halving event, Bitcoin price has quadrupled. But what you will see is that price has dropped 13%, and it's the end of cryptocurrency. Guys, that was the live stream for today. Drop me down some comments, and I'll catch you next time.